Couple other miscellaneous points to know. We've got the Small Cases Division. Now, this is a division of the U.S. Tax Court, also known as the S Division. You don't need to know that, just fun fact. It's a specialized part of the tax court designed to handle smaller tax disputes in a more informal and expedited manner. This division is intended to provide a simpler and more cost-effective process for taxpayers with relatively smaller tax issues. But yeah, it makes sense. I mean, you're not going to have the same court for someone disputing a $5 million tax discrepancy as you are someone who is just dealing with a $10,000 difference. Cases in the Small Cases Division are generally limited to those involving tax deficiencies or disputed refunds of $50,000 or less for any one tax year. While the Small Cases Division is part of the U.S. Tax Court, its decisions do not carry the same precedential weight as those from the regular tax court, because these are small ones. Basically, you're not going to set a whole precedent for the tax and legal system based on something that was less than $50,000. Basically, that's the rationale there. Decisions made by the Small Cases Division cannot be relied upon as precedent in other courts, including other cases in the tax court itself, because of the streamlined process and the informal nature of the Small Cases Division may not involve the same level of detailed analysis and documentation as in regular tax court cases. Additionally, here, no party can appeal a decision of the Small Cases Division with any other court, and even if the deficiency is paid, there's different rules. We're getting into the small courts. This is just what you have to follow if you're going to go through that route. A writ of certiorari. Say that 5 times fast. A writ of certiorari is a legal document issued by a higher court, such as the U.S. Supreme Court, that requests a lower court to send up the record of a case for review. This process allows the higher court to decide whether it will hear the case and potentially overturn or modify the lower court's decision. The purpose of this is to ensure that lower courts are interpreting and applying the law correctly and consistently. And you see these courts, they're checking each other. They're making sure that, hey, they're following the rules. And just like a taxpayer should have a reasonable basis for the deductions they take, the income they don't report or they report or anything like that, so too do the courts need to check themselves and make sure that they are being fair, presenting everything properly, and they're actually being consistent and correct. In the context of U.S. tax law and courts, a writ of certiorari, I'm just going to have fun with that, may be used when a tax-related case has been decided by a lower court, such as a U.S. District Court, the U.S. Court of Federal Claims, or the U.S. Tax Court. And one of the parties involved in the case believes that the lower court's decision involves a significant legal error or an important issue of federal tax law. If the U.S. Supreme Court decides to grant the writ, it will review the case, potentially providing clarification or setting a precedent on a tax law issue that may have broader implications. Lastly here, it's important to note that the U.S. Supreme Court, this is kind of what I mentioned earlier, hears only a limited number of cases each year, and it is relatively rare for the court to grant a writ for tax-related cases. Like I said, there have been tax cases that go up to the Supreme Court, not too frequent. However, when such cases are accepted and heard by the Supreme Court, the decisions can have a significant impact on the interpretation and application of federal tax law across the country. Remember that the U.S. Supreme Court is the highest court in the nation, and for any issue, if it's tax-related or not, this is the last level of appeal. Whatever they say goes, whether you like it or not. Notices of deficiency. We mentioned these a little bit earlier, but let's see a few other points. Make sure you know this. Last slide here. We'll wrap it up and call it a day. Now, a statutory notice of deficiency, commonly known as the 90-day letter, is issued by the IRS when it determines a taxpayer owes additional taxes. Yeah, we knew that. The letter outlines the taxpayer's options, which include paying the deficiency or filing a petition with the U.S. Tax Court within 90 days. Again, stuff to memorize here. The taxpayer does not need to pay the deficiency and file a claim for a refund with the IRS before filing a petition with the U.S. Tax Court. If a taxpayer wants to take their case to the U.S. District Court or the U.S. Court of Federal Claims, they must first pay the deficiency, again, something we saw, and file a claim for a refund with the IRS. If the refund claim is denied, the taxpayer can then sue the IRS. I mean, just saying that right there, that sounds a little spicy, for a refund in either of these courts. On the other hand, a preliminary notice of deficiency or 30-day letter is issued after an IRS audit if the taxpayer disagrees with the proposed adjustments. This letter gives the taxpayer 30 days to protest the proposed adjustments and request a conference with the appeals officer. Again, this is kind of what we saw before, just a nice recap. Make sure you're quite familiar with all of this. This is different from the 90-day letter, which provides the taxpayer with the option to file a petition with the U.S. Tax Court. Make sure you know everything you need to for these notices of deficiency. That's pretty much a wrap on our courts, our judicial process. Let's wrap it up with a nice summary. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.